हेलो एवरीवन, आप सभी का फिर से एक बार स्वागत है मेरे यूट्यूब चैनल में जिसका नाम है कॉमर्स ट्रेजर। इन दिस वीडियो वी आर गोइंग टू डिस्कस द सेकंड पार्ट ऑफ MCom PGET 2014 क्वेश्चन पेपर. If you have not seen the first part, I have put the link in the description. Do watch that video, and without wasting much time, let's move on to the last 25 questions of this paper. Mutual funds are form of investment vehicles collecting resources from retired individuals, salaried class, working woman, all of the above. So right option is going to be option number D, that is all of the above. So we collect funds from all the individuals, that is he may be a retired individual or salaried class, working woman. Opinion on the ability and willingness of a issuer of a particular financial instrument to honor the financial obligation is known as corporate governance. No, this cannot be answer. Dematerialization cannot be the answer. Credit rating is the right answer. So credit rating is nothing but it rates the particular firms on the basis of their willingness and ability to honor the financial obligations. In simple, how better they can pay off their debts or the loans. Based on this, ratings will be given by the rating agency. Fixed deposits in a bank are a form of. So fixed deposits in bank are form of non-marketable investment avenue, which is your option number C. IRDA, established in India, deals with the regulations of banking business, mutual fund, pension fund, none of the above. So right option is going to be none of the above, because IRDA stands for Insurance Regulatory and Development Authority, which looks after the insurance. Banking business is looked after by Banking Regulation Act as well as the RBI. Mutual funds in India are looked after the SEBI, which is your Securities and Exchange Board of India, and pension funds are looked after by PFDRA, that is Pension Fund Development and Regulatory Authority of India. When the owner of the asset sells the asset to another party and takes back the asset on lease for a fixed period of time is known as. So this is nothing but it is known as sales and lease back, which is not given in the option. Therefore the right option is going to be option number D, none of the above. So here what the owner does, owner sells his asset to another party and again take back the same asset for use for a particular period of time. Capital lease is nothing but it is a long term lease, and operating lease is nothing but it is a lease which is taken for a short period of time or specific period of time. Statutory auditor of a company is appointed by. So this question again has been repeated 2-3 times. The right option for this is board of directors. They are the persons or they are the group of individuals who are going to appoint the statutory auditor of the company. Financial audit is intended to provide a reasonable assurance over the accuracy of the financial statement, absolute assurance over the accuracy of the financial statement, assurance on the qualification of the auditor of the company, none of the above. So right option is going to be option number B, that is absolute assurance over the accuracy of the financial statement. Examination by the auditor of all documentary evidence which is available in support of the transaction entered into the books of account is known as. So again a very direct and a simple question. It is nothing but it is called as vouching. A person shall not be qualified for appointment as an auditor of a company if he is chartered accountant as per ICAI. No, this is not the option. A person who is not indebted to the company. No, this is also not the option. So right option is going to be option number B, that is a person who is an officer or employee of the company. He cannot be appointed as an auditor of the company. When the auditor is unable to obtain audit evidence regarding particular account balances, he gives. Whenever an auditor is not satisfied with the evidence, he issues a report which is called as qualified report. Unqualified report is given by the auditor when he thinks that everything is perfect and the company is clean of frauds. Price discrimination is followed by. So very simple question. Only in case of monopoly seller he can go for price discrimination, because he is going to be the only seller in the market and he can discriminate the prices as and how he wants. Marginal revenue curve always slopes downward because decreasing marginal cost, decreasing productivity at higher level of output, more can be sold only at a lower price, none of these. So right option is going to be option number B, that is decreasing productivity at higher level of output. An increasing marginal cost curve pushes downward the average cost curve, upward the average cost curve, downward the fixed cost curve, all of the above. The right option is again option number B, that is upward the average cost curve. When the output increases more than the increase in input, it is known as, so it is known as option number C, returns to sale, which may be increasing returns to sale whenever he get more than what he has used as input, decreasing returns of scales, or constant returns to scale. According to Schumpeter, profit is a reward. So again, this is the repeated question. As per Schumpeter, he said that profit is a reward for taking risk in doing a new business. A database management system is a soft tool that allows multiple users to. Now in this question, if you see, access and process both are the right answers, but as there is no such option, we can go with option number B, that is access, because DBMS, that is database management system, gives access to multiple users, and it also helps in manipulation, that is modifying the data using its data manipulation language. A presentation software that saves a lot of time of people who otherwise would have to use other types of visual aid is known as. So very simple. The thing which I am using in the presentation now, that is your PPP, PowerPoint presentation. Computer system that provides some combination of interoperability, portability and open software standards are known as, so this is known as option number C, that is open system, where you have combination of interoperability, portability and open software standards. A collection of book debts does not changes. Book debts is nothing but it is the value of the debtors. So whenever you are going to encash, right, you are going to collect money from the debtors, your cash is going to increase, but the debtor values are going to decrease. So ultimately your current assets are going to be same. Therefore, there will be no change in the value of working capital, because cash as well as debtor values both comes under current asset. Cash value increases because you are collecting money from debtors, and debtor value decreases because they are paying you the amount. So option number B and C cannot go, and option number 1, that is working capital, becomes the right answer. Ratio which is computed by dividing EBIT of the firm by interest obligations. Interest obligation is nothing but interest on debentures, or if you have taken any loans, so that is nothing but it is called as interest coverage ratio or coverage ratio. So it is calculated by EBIT divided by whatever interest obligations you have in the business. The current asset of X Limited are rupees 1 lakh and current liability are rupees 50,000. It has an inventory of 25,000. The quick ratio for the year will be. So if you see, current asset is rupees 1 lakh, current liability rupees 50,000. And inventory they have given as 25,000. The formula for quick ratio is quick asset divided by quick liability, or if quick liability is not given, you can use current liability. Quick asset are nothing but current asset minus the value of stock or inventory. So current asset is 1 lakh, inventory value is 25,000. Your quick asset are going to be rupees 75,000. So 75,000 divided by 50,000. So 25,000 2s are 25,000 3s are 3:2. But if you see the options, there is no such option of 3:2. So when you further divide 3:2, it becomes 1.5:1, right? When you divide 3 by 2, it becomes 1.5, and 2 by 2, it becomes 1. So the right option is going to be option number C, that is 1.5:1. The net profit of the company are rupees 10,000 and sales are rupees 1 lakh. If the asset turnover ratio is 2, then the return on sales will be. So let's see what has been given in the question. Net profit 10,000, sales 1 lakh, and asset turnover ratio is 2. So what is the formula for asset turnover ratio? Asset turnover ratio is nothing but sales divided by asset. So we know that asset turnover ratio is 2 and sales value is rupees 1 lakh, and asset value we do not know. So when we just cross multiply this, so 2 into assets becomes 1 lakh. Asset is equal to 1 lakh divided by 2, which is going to be 50,000. So your company has 50,000 rupees assets. Now what is the formula for return on asset? Return on asset is nothing but net profit divided by the asset into 100. Net profit is 10,000, which is given in the question. Asset we just found out it is rupees 50,000. So 10,000 divided by 50,000 into 100 is going to be 20%. That is your option number B. 20% will be the return on asset. Failing to perform any term of contract, written or oral, without an legitimate legal excuse is known as. So whenever you enter into a contract and you do not execute the contract without any legal excuse, then it is called as option number C, breach of the contract, and you will be facing the lawful obligations whichever are there as per the act. An agreement to form a valid contract should be supported by a consideration which is. So always remember, consideration should always be an lawful consideration. That is, whenever you are getting something in return for the promise, that should be for a lawful consideration. It should not be an illegal consideration. The last question for 2014 MCom PGET paper was, an agreement not enforceable by law is known as. So it is known as option number B, that is void agreement. So void agreement is not enforceable as per the law. What is void contract? Void contract is a contract which was valid up to a particular point, but after that it becomes an invalid contract. For example, you have booked hall for marriage in April, and because of the lockdown all the marriages were cancelled, then that agreement becomes a void contract. Voidable contract is nothing but you are entering into a contract because of some force or because of someone is influencing you, and after that if you want to avoid the contract you can cancel the contract. That is called as voidable contract. Voidable, which means which can be avoided. If you want to get detailed explanation about all the different types of contract, I have made an separate video on this. I will put the link in the description. You can watch that video and solve the related MCQs which are there in that video. And if you like this video, please hit a like button, and if you haven't subscribed my channel yet, please subscribe my channel and share it with your friends, and also press the bell icon so that you can get a notification as soon as I upload a new video. Thank you for watching the video. Meet you again with another video.